Okay, so hi everyone. Thank you for joining us in time for our Fintech Soft-Landing Workshop. Just before we start, we would love to take a few minutes to tell you about the Seeds of Bravery and our amazing consortium and what we are doing for Ukrainian fintech ecosystem. This workshop is brought to you by two partners with the help of many other partners. So it's organized by Wacom Deep Tech Acceleration and Lux Innovation with the help of DLA Piper, Axis Beak, Erasmus Center for Entrepreneurship, and all of the consortium partners who are here with us on our constant journey to enhancing the Ukrainian deep tech ecosystem. My name is Anastasia Lubisheva. I'm a program development manager at Wacom Deep Tech Acceleration, and I'm here today as a moderator, and I will tell you a little bit more about the Seeds of Bravery opportunities. First of all, we would jump into our agenda. So we have a wonderful lineup of experts today, handcrafted, hand-picked jewels for you to understand the fintech landscape and how to navigate it on a global arena. So we will have Elizabeth Ivankevich from UAFIC, who will speak about fintech horizons, data insights, and Ukraine's path to EU markets. Following with Igor Zarachovich from UAPay and Friendocash. He will dive deeper into fintech growth and communication, trends to follow, mistakes to avoid. We'll have an amazing fireside chat with Nasir Zubairi, CEO at Loft Foundation, moderated by our partner Inna Parapolitsa, Lux Innovation, and they will talk about scaling into Europe and effective strategies that will help you, our startups, our entrepreneurs do that. Then we will jump into the legal and regulatory framework in fintech, presented by two amazing DLA Piper specialists, Nicholas Kalakiris and Aline Kiers. And last but not least, we'll have a panel discussion with our Ukrainian founders, fintech founders, entrepreneurs who knows how to scale, who already have experience with this. We'll have Denis Galenko, Lyudmila Tomashenko, Sofia Sherbanyuk, and Alexei Alexashin, and they will talk about challenges in real-life experience with Yelizaveta Bordunova from Vector. She will be a moderator for this panel discussion. So we have a pretty intense lineup of experts and workshop. So hope you are ready to receive this new portion of insights from our fintech landscape entrepreneurs. A little bit about the Seeds of Bravery. Seeds of Bravery is a 20 million euro project funded by the European Union, and its aim is to support Ukrainian tech startups to bring them closer to EU. So basically building a bridge with financial and non-financial activities from UA to EU and later on abroad. We have this Seeds of Bravery project is implemented by 17 organizations and 2 associated partners. And basically what I want to tell you here is that these Ukrainian and European institutions work jointly in order to create such a great value to our deep tech ecosystem that I'm personally very excited to be among these organizations. A bit more about the project program. So we have 5 financial programs, the application for which have already ended. However, apart from the financial aid that we provide, we have many non-financial open to public activities. And I want to focus on a few that are really related to the market discovery and industry-specific workshops. So first, I would love to invite you to our market discovery workshops. So basically, these are the workshops specified for each market that you as a startup, as a founder, are willing to enter. On the bottom, there is a lineup of countries that already been covered. And with this QR code, you can register for upcoming. Just a small promo on the 26th of February, we will have a market discovery Ukraine, where you will learn a lot about the changes in the ecosystem, in the Ukrainian ecosystem since the full-scale invasion. So please register follow our market discovery workshops, because they're super valuable. And here are the upcoming workshops that I've mentioned and that are coming March, April, and later on. Next, we have industry-specific soft landing workshops, and today you are actually participants of one of those workshops of fintech. But if you are somehow related to other industries, check our workshops via YouTube and register for them as well. They are open to public. And now it's my huge pleasure to introduce you to our first expert. It's Elizabeth Ivankevich, Head of Partnership at Ukrainian Association of Fintech and Innovative Companies, or UAFIC. And she will tell us all the insights about the fintech horizons, data, and Ukraine's path to EU markets. So Elizabeth, the floor is yours. I will turn on your presentation in just a second.
Okay, thank you so much, Anastasia, for a presentation. Nice to meet you. It's a pleasure to be here today and to have the opportunity to speak with you about the Ukrainian fintech markets. So a little bit introduction about Ukrainian Association of Fintech. Our association is a center of gravity of the fintech ecosystem in Ukraine. We have been on the market for 7 years. During this time, we have achieved great goals. If we're moving on, you can see our projects, and a key point about us: we have 70 plus B2B members in our UAFIC community. We've done a lot of analytical research projects. We have more than 2,000 attendees of our conference, and we have 2 successful projects of a national scale. It's FinSkarga and Open API platform for Ukrainian business stability for fintech and innovative SME. If we're moving on, we can see more about our API platform. Here you can scan a QR code and learn more about our platform and register your own profile. The main goal of our platform is to provide Ukrainian and international companies with an additional channel to establish business connection by optimizing marketing and promotion resources. So please feel free, and we are open for your application. And we are moving on, and I want to share you more about Ukrainian fintech ecosystem. So if we're talking about fintech in numbers, you can see that according to the Ukrainian fintech catalog, we have 256 companies on the Ukrainian market, and on this we have 75% companies that have passed the break-even period. 60% of Ukrainian fintech companies have representatives in the armed force of Ukraine, and 47% of the companies also operate on the international market. So moving on, and let's see how the market grows. 75% of fintech companies have passed the break-even point, of which 31 did this in the first year of operation. If we compare 2023 and 2024, we see that the leading number of companies are at the scaling stage, which is in 54%. We also have 27% of major companies. If we look at the distribution of fintech companies by the number of employees, 26% are companies with more than 75 employees, and 22% are in the category of between 6 and 10 employees. Let's talk about the location of our companies. 5% of fintech companies are located exclusively abroad. The key region is a key region for fintech, so 79% are located here. 4% of companies are located in Kharkiv and Dnipro, despite their proximity to the military zone. Also, we have a new region for us, it's Vinnytsia. Here are located 1% of new fintech company in Ukraine. So let's moving on, and regarding to the global overview of markets where Ukrainian fintech operate, we can see that 89 of fintech companies named Ukraine as a key market. 29 already operate in Europe, and 16% is in the US market. Also, 20% operate in the Asian market. If we're talking about fintech companies and their plan to enter to the international arena, we can say that 38% of fintech companies plans to enter to the international arena, and 47% already on the international market. Now we are going to look to the breakdown by areas of activity. We can say that the number of companies working in the field of technology and infrastructure increased significantly in 2024. The number of companies providing corporate and consumer lending service decreased to 7%. The number of companies in the insurtech sector decreased by half. 32% of fintech companies have already raised, if we're talking about source of financing for fintech companies, we can say that 32% of fintech companies have already raised investments before, half of them direct funds to capital investments. And also 79% of companies are financed with their personal funds. If we're talking about the technology, we're moving on, and here we can see that the 94% of fintech companies point to artificial intelligence as one of the most promising technologies for the Ukrainian market. So Ukraine have many successful fintechs projects that have inspired the Ukrainian and international market. Here you can see. And this is how the map of Ukrainian fintech ecosystem currently looks like. Yes, so I also propose to talk a little bit about fintech trends, global trends on the market. And our association have done a global research that named Fintech Trends 2025. We are identified three main trends today. It's cybersecurity, artificial intelligence, and machine learning, and embedded finance. If we're talking about cybersecurity, so the problem of security personnel shortage among companies that have suffered cyber attacks have increased by 26.2%. If we're talking about market size, we can say that $2,071 billion market size, we waiting for 2029. If we're talking about artificial intelligence, regarding the research by McKinsey, we can say that 67% of respondents said that they expect their organization to invest more in AI over the next 3 years. 65% of respondents say that their organization regularly use generative AI in at least one business function. If we're talking about embedded finance, among the main trends are multi-rail payments, the entry of traditional banks into the ecosystem, and the emergence of new technologies in financial offers. Payments, lending, and insurance products that are particularly easy to implement will lead the way. So if we're moving on, here you can download the research, our Ukrainian FinTech catalog and the FinTech trends to learn more about the trends and FinTech market, and know more about Ukrainian FinTech. So thank you so much for your attention, and here you can find our contact. We are open for communication, so let's develop Ukrainian FinTech ecosystem together.
Wonderful. Thank you, Elizabeth, so much for such a great introduction of fintech ecosystem inside Ukraine and abroad. This was very insightful, and actually the UAFIC is one of the key leading organizations here in Ukraine, which gathers a lot of statistics and a lot of data and analyzes it and helps you understand the local market and how we are going global. So high recommendations to follow that links and to yeah, and to see how it's going and how it's growing. We are moving forward, and I'll just share my slide right now. I hope you can see my screen, and we are moving forward with our next panelist. It's Ihor Zarachovich. He will represent the UAPay and Friend2Cash perspective, and this will be a 30-minute presentation on the fintech growth and communication, the trends to follow and mistakes to avoid. Following with the Q&A session, of course, as usual, I wanted to remind you that you can always tap your questions in the Q&A chat that we have available to our participants, and then either live or in written, our experts will be happy to share their insights with you. So Ihor, the floor is yours to share the screen.
Yeah, perfect. Thank you very much. Let me quickly share the presentation. Can you see it right now?
Wonderfully.
Perfect, perfect. So thank you very much for having me. My name is Igor. I'm project manager at Friend2Cash and UAPay. And today I'll try to provide you with as much insights and hands-on experience on growth and communication on the European market and how to actually efficiently expand to foreign markets from operating in Ukrainian markets. So about UAPay and Friend2Cash. So actually UAPay is one of top 5 financial institutions in Ukraine with 12.3 million registered cards and 5.8 million unique customers. Friend2Cash, it's our another venture. We made like crypto neobank, and we are currently expanding to and launching in the European Union. And currently, about our traction, we have 35,000 plus community members, meaning people from X, ex-Twitter, Telegram, and other communities. We have 32,000 connected wallets to our Quest campaign website, and we have more than 9,000 people who sign up to our waitlist. And today we will cover the topics like how to actually select the perfect market for Ukrainian fintech expansion, common mistakes from our personal experience as well, and strategies to attract customers, partners, investors, and how to efficiently communicate with people on this global arena. So why should actually Ukrainian fintech startups go global? According to MasterCard research, more than 62% of Ukrainians use digital banking. It's like very high number considered to all other underserved and underbanked population there are in the world. Additionally, Ukraine ranks 6th in cryptocurrency adoption globally by Chainalysis. And as we all know, like 10 years ago, it was one of the main hub for cryptocurrency adoption and development. So yeah, and in terms of growth areas in fintech, one of the most notable are Web3, AI, BNPL, digital banking, embedded finance, etc. So why should we expand? Of course, obviously, it's a much bigger market than we have in Ukraine. So subsequently, it's more customers and higher transaction volumes. It's a more financial stable market, so it has expanded regulatory sandboxes and also like much firmer regulation environment, and it might be more stable for some businesses to expand to Europe. And of course, it's about global partnerships and funding and access to capital, to foreign capital, and building strategic alliances with other companies. So in terms of quick overview of the digital payments market in Europe compared to Ukraine, so projected transaction volume in 2025 in Europe is going to be around 2.5 trillion US dollars, with continuous annual growth rate of around 21% from 2025 to 2029. And if we compare that to Ukrainian market, we have only 17.5 billion US dollars transaction volume and CAGR of 23.8%. Meaning that European market, if you look into the numbers, is 144 times larger than Ukrainian market. So key questions before expansion. Each business has to understand the market where they are going, and they have to face and analyze it thoroughly to have an efficient launch. And firstly, you have to understand what markets are actually underserved in your vertical, because European market is highly saturated, and but there are a lot of upside potentials for some particular countries. And where are better regulations and boxes and government incentives for innovation, because it's also an essential part. As well, you have to consider and thoroughly understand to how to actually attract customers, what marketing funnels work the best in your market, why, like, and how to build proper localization, and how to actually target people from the market you are going on to efficiently. So where to find partners and investors, which events and platforms help to establish right connections, and how to actually build B2B relationships. So you have to at least answer to all these questions to move on the European market or any other global markets. So in terms of Ukrainian fintech success stories, notable companies include Monobank, Fintech Farm, Trusty, Finmap. They already tried or established businesses in Europe, UK, and in Central Asia, etc. So these companies actually go global and have quite significant traction. And UAP and other Ukrainian fintech companies are building innovative payment solutions ready for global markets. But really, international growth is more than just translation and of the services you provide. It's really more of UI UX localization and adapting the product to local customer needs. It's partnerships with local banks, payment providers, and other service providers, because building your own infrastructure from zero takes a lot of time, effort, costs, and it's easier to test the waters by partnering with local entities. And building brand trust, in the attention economy, which we are living in, it's essential part, and you have to have very strong PR and marketing strategies to differentiate yourself on the market. So main challenges of global expansion are mainly regulatory challenges. So it's different laws, licenses you have to obtain, be compliant with the market regulations, and etc. For example, in Europe is PSD2, GDPR, and strict banking regulations, etc. United States have their own unique ecosystem, I would say. So it's very hard to adapt really fast and expand here really quick compared to expansion to Europe. And also, for example, United Arab Emirates and Gulf region, people from here really appreciate Sharia compliance. And if you have it, you will have more efficient communication and work in the region. And also, it's one of the challenges may be the lack of brand trust, because customers trust local fintechs more than new entrants, especially foreign entrants, which takes time to build the credibility, and it takes some effort. And also, foreign partnerships usually take much more effort due to language barriers and cultural differences. So yeah, it all depends on strategic planning, local adaptation, and strong partnerships in the end of the day. So how to avoid expansion mistakes? Localization really matters, because UX UI must feel native, and you must thoroughly adapt to the product design, language, communication according to the local user expectations. Partnering with local payment providers and service providers, and building strong marketing and PR strategy. How to scale fintech startups through product and marketing. Firstly, you have to test the product on a smaller scale, because going all in and trying to capture the whole European market, for example, it's quite risky task. So for many Ukrainian startups simply start with Poland or the Baltics before the large expansion, or also from the UK, because it has really favorable regulations and startup incentives. And also, you have to obviously analyze competitors to learn from their successes and failures. And also, you have to define a strong, unique value proposition, and to understand what actually people suffer from, or what problem do they actually have, and how to actually solve this problem better than local providers and competitors. And it's really essential to differentiate yourself on the market, because European markets, UK markets, US markets are quite highly saturated, and they have lots of different startups, and each startup has to differentiate themselves in it. So in terms of marketing and growth strategies, ideas like getting featured in top fintech media, participating in events, attending podcasts, participating in competitions, applying to some grants, etc., etc. So try to get the exposure as much as possible. So in terms of social media and community building, it's quite obvious to focus on local platforms. For example, X in the European Union or United States, Telegram works really well for Eastern Europe, WeChat in China, etc. And work with influencers and bloggers to establish trust. And for the record, from our personal experience, working with small bloggers sometimes works really well, because they require less costs, but they give much more performance, and for the particular budget, you can acquire much more micro bloggers compared to one large blogger. And referral and incentive programs are also an essential part, because the word of mouth is one of the most efficient and strongest marketing strategies. And for instance, Revolut grew its user base 150 times from 2015 to 2018 by incentivizing the referral marketing and provoking word of mouth. So K-Fintech events in Europe include Web Summit in Lisbon. There are lots of people here. We usually attend it, and it has really good opportunity to connect with people. And moreover, there are lots of Ukrainians coming here. So honestly, I've never seen such amount of Ukrainians as on Web Summit. Money 2020, it's the biggest and the biggest event, fintech event, and it's really efficient for and useful for B2B businesses. Slush is great for early stage startups and investor networking, because lots of VCs and angels arrive here. And for the crypto part, Paris Blockchain Week is very good and leading event in blockchain and crypto industry. And NFT Paris is also like one of the largest events in the world, with 20,000 plus visitors, and all the companies coming here. Great networking and great opportunity to expose yourself and find the right partner for your future business. So how to actually choose fintech event, the right event for you? As I said, Money 2020 is mostly for B2B clients and fintech infrastructures. Slush is more connecting with investors on the pre-seed and seed stage. If you are on pre-seed and seed stage, it's quite good event for you. So NFT Paris, it's like huge exposure and lots of connections from starting from small startups to large corporations in crypto industry. And in terms of PR and brand awareness, Web Summit, it's perfect because it's literally huge. So it attracts huge amount of people from Europe, from America, and from any corner of this world. So how to prepare for fintech events? You should make a list of key contacts, and one of the most frequent mistakes is that people rely on random meetings and cold outreach without personalization. And also, if we're talking about conferences, people usually communicate only through the application, and this in the end of the day is not as efficient as using a multi-channel approach. So to do it better, you have to identify ICP and book meetings multi-channelly. And also, it's essential to find warm introductions, because any cold outreach would never compare with warm connection, warm introduction, and like it's an obvious part, I think. So also you have to create a strong pitch. You don't have to make it very long. You don't have to make it too wordy and to include too many details. Just include all the essential parts, the problem you solve, why are you unique, and who are you. And people really looking to who are you and what is your expertise, what did you do in the past. And from our personal experience, from my communication with VC investors, I heard some feedback that if they are not completely excited of the pitch deck itself, they usually get the second chance of looking at the founders team. And if they see that the founders have strong expertise, it would be one additional ground for them to talk with you. So also, it's essential to mention about follow-up and quick responses, because investors I guess many of you receive lots of spam and lots of messages, cold outreaches every day, and it's essential to follow up people in 24 to 48 hours, but do not spam, just to follow up for a couple of times for them to remind of yourself. So how to do effective cold outreach? As I said, you have to make clear ICP, define multiple ICPs, and make tailored offerings for each category, each group that you're targeting. If you're talking about VCs, you have to analyze VC market, and you have to write, if you are from fintech industry, you have to write only to VCs that are actively investing in fintech space or are sector agnostic. So it was one of our mistakes before that we tried to write all the VCs we could find and all the contacts we could gather. And if you think that they are investing in deep tech, for example, or biotech, and you will impress them with fintech startups, you would probably not, because they have some inner policies which they are strict to. And even if they want, some VCs cannot invest in the projects outside of their scope. So also it's very useful to check for their portfolio to understand if they invested in companies like you, and if they understand the market can bring not only the capital to your company, but probably some expertise, some help, some connections, etc. In terms of personalized outreach, honestly, cold generic outreach never works, and personalization should always be. So send personalized messages, at least input variables like name and the company of the person who you are targeting. Keep the message as short and as conscious as possible, ideally less than 150 words. Utilize AI SDRs, because like nowadays we have lots of tools that allow you to automate all the processes, and doing this manually is inefficient, hard, very long, and in the end of the day, it has a lot of human mistakes. And follow up your lead up to 3 times. And in terms of different communication channels, we gathered statistics from our previous outreach campaigns that we did, and we can say that conference apps usually have 10 to 20% of response rate or reply rate. LinkedIn is around 5 to 15% of cold outreach. Email varies from 1 to 10%. Telegram is the best way, because you always have the best reply rate, and it's much easier for you and for your lead to continue communication if there is a mutual synergy. And a message reply rate is up to 90%, but it has some bottlenecks, and I would not say that it is the best way for the communication, and especially for cold outreach strategies. So why follow-ups after events are important? You have to send the message within 24 to 48 hours, because if you send it too late, they will simply forget about you due to huge amount of letters people receive every day. And you could like just an idea, thank them for the meeting and suggest some next steps, probably also add some numerical values. You want to provide some insights or some case study or anything that will make the person agree with enthusiasm to have a conversation with you in the future. So write a short email, and if possible, always use and try to use warm introductions, because for if we're talking about VCs, it shows amount of effort you are ready to do to actually communicate with an investor, because they receive thousands of messages monthly, and it is very hard to differentiate yourself from other competitors. And moreover, if you are introduced by a warm connection, both parties have more trust without any uh, additional circumstances, I would say. So it's much more efficient to connect through warm connections, and it is better to have like 10 warm connections than 20 or 30 cold connections, because cold connections needs time, effort, and yeah, lots of effort to build trust in the end of the day. So finding investments and avoiding mistakes. So you should target the proper investor when you're doing cold or warm outreach for your startup, and if you're raising capital. So basically, if you are raising small checks, you would rather go to angel investors because they have less complicated due diligence process, and you can get the access to capital faster. And also, angel investors usually contribute and follow up the project itself. Venture capital provide larger investments, but through a little bit tougher conditions because of due diligence process and because of all the bureaucracy. And private equity, it's about growth and pre-IPO stages. It doesn't suit to startups at early stages, namely at pre-seed, at seed stage. And it makes no sense to write them, because they will, if you are on the early stage, because they will simply respond you with no, and let's talk a little bit later, because we like early stage startups are outside of their focus. And common fundraising mistakes include overvaluing the startup. So basically, it's very high valuation that may not be attractive for investors in the end of the day. No clear financial model, because investors want to see if you have at least a vision of how your goal will be accomplished, and how will you achieve your goals in the end. And growth potential must be data driven, and traction is essential. Any traction. If you are pre-revenue, just include your social traction, or any other traction is possible. But without traction, for investors, it's really hard to make some first impressions about the startups, and we all love numbers. Common mistakes when talking to investors include like bad communication, generic outreach, no key financial metrics, and too many follow-ups, and being annoying. How to communicate properly, personalize every message, and try to be as approachable and include as much personalization as possible. So you can probably mention, for example, if you're targeting a particular person, his interview, his talk, his I don't know, achievement, etc. This really makes your approach more professional, I would say. Be short and clear, because investors don't have time for reading lots of emails, long emails, and you have to differentiate yourself on the market of competitors who also write tons of emails to the investors. And use real numbers, because data matters more than vision. So from our own case study, we are raising crypto fundraising round. In August 2024, we developed and presented our tokenomics at Token 2049 in Singapore. And also we had a cold outreach campaign. But it appeared that valuation was too high, and allocation and distributions could be relocated in the more efficient way. And in November 2024, we conducted an independent audit with Haken, which is one of the best auditing firms in the world. And in the result, we received AA score security certification. It's one of the best scores, improved investors' confidence, did lots of simulations, and made our tokenomics much more efficient than it was before. So actually, transparency matters. If investors don't trust the numbers, they won't simply invest. And independent audits improve credibility, and also they can point out on the problems and issues you are not seeing. And final takeaways to sum up and wrap up. Always prepare for the meetings in advance. If you are going for the conferences and you are having, for example, a booth, don't rely solely on a booth or don't rely on some random communications. Prepare in advance. Use multi-channel communication, think long term, and always provide numbers, traction, and show your expertise to the global market. That's it. Thank you very much. So if you have any questions, I would love to answer and provide some additional insights.
Ihor, thank you so much for an amazing presentation. It was honestly like a true guide, step-by-step plan on how to scale and real mistakes to avoid. We have a couple of questions and a couple of minutes actually to reply. So the first question would be, Ihor, can you recommend some tools that for a fintech startup to effectively manage localization? So maybe something that worked for you as an additional tools to understand the behavioral patterns of each country and etc.
In terms of tools to analyze the patterns, unfortunately, I cannot provide you insights because I barely work with technical part. But our technical team, I can ask our technical team and provide you with some insights after the meeting, actually.
Okay, we will include that in the follow-up, probably because we will send to all of our participants the presentations and additional information. And the second question is, what is the most important thing a fintech startup should focus on in its early stage growth while testing hypotheses?
While testing hypotheses, in my personal opinion and experience, it's really essential to gather feedback from experts, from people to actually test the waters from the perspective of if this product is actually needed and will be useful in the market. And any type of feedback, and from my personal experience again, we did many projects, and one of the projects was not fintech itself. How did we test the waters? We just arrived to the conference in the UK, one conference, and we just simply told about the idea that we are building some MVP, but we actually haven't built nothing. We saw really significant interest from industry experts, from people, from average users, from retail users, from everyone. And after that, we just built an MVP. After that, we launched, and we saw that this initial feedback was as well as a motivation for us, but also as a practical insight and validation of the idea. So if you want to validate your idea almost for free and have strong insights, go to conference and work with people. It's the best way you can do it.
Ihor, thank you so much to you personally and your team for being a part of this. It's a bravery industry-specific fintech workshop. We really appreciate your insights, and this was very powerful. Dear participants, we are moving forward, and we will have right now an amazing fireside chat with about the scaling into Europe. And to moderate this section, I invite my colleague Inna Parapolitsa from Lux Innovation. They are our partners in this Fintech Soft-Landing Workshop and in Seeds of Bravery Consortium as it is. Inna, the floor is yours.
Thank you, Anastasia. Hello, everyone. My name is Ina. So I'm senior advisor in Luxembourg National Innovation Agency. And together, we will have a fireside chat scaling into Europe. And this fireside chat will be followed with a Q&A session. And I encourage you to use this opportunity to ask your questions in the end, because today we have an amazing fintech expert from Loft. Loft is Luxembourg House of Financial Technology. And I'm inviting Nazir Zubairi to join the fire chat. Hello, Nazir.
Hi, Ina. How are you?
Good, good. Thank you. And thank you for this idea to have a fireside chat, because today our workshop is 3 hours. So it will be, as you suggested, more live and interesting to interact with our audience today. So the first easy question, tell us about yourself. What do you do and what's your experience?
Sure. So hello, everyone. I hope you are well. My name is Nasser Zuberi. I am the CEO of the Luxembourg House of Financial Technology, the LOFT. We are a foundation that is supported by both the government and the private sector to drive digitalization of financial services here in Luxembourg. I sort of fell into this role really when I moved to Luxembourg. I came here to set up a bank. I had previously set up a digital bank in Germany called Solaris Bank. I've been doing startups, principally in the fintech sector, since about 2011 when I set up my first company. Prior to that, I had been working in investment banking for most of my career. So my career spans about, well, I realized yesterday, 28 years exactly, in January this year. So I'm an old guy. I've been around. I've lived and worked in 9 countries, in the US, in Asia, across Europe as well. Had a fantastic ride, but I hope all of that brings itself to a focal point in terms of helping me to be a better person and a little bit more capable in terms of building and running businesses.
Oh, wow, it's impressive. So let's try to use this 30 minutes to share with your experience. So from your experience, are the key consideration for success when scaling into Europe? Because as it was mentioned before in this workshop, Ukraine is very digitalized country. 62% are using digital banking, and it's one of the highest numbers in the world, but still we are not part of European Union, and we have different cultures. So that is why your experience, how it works in Europe, is very valuable.
Yeah, I think there are sort of 4 key points really that I will focus on. And I think some of these things have already been covered, so I won't dive too deeply into it. I think firstly, very critically important is sort of your market entry strategy. Now that may seem obvious, but I think sometimes people don't fully appreciate and recognize that although the EU is one block and there are huge benefits to being in the EU, particularly from a fintech perspective, and licensing and being able to access across 27 EU countries, but each and every country is very distinct and very different. You really need to, coming into the EU, you've got to be careful in where you set your foot in first, with your market entry strategy that aligns with your business model, or that you modify your business model specifically for that country, but also very dependent upon customer profiles and the regulatory environment, because although there is uniformity in regulation across the EU at a macro level, countries have individually created legislation that potentially creates new opportunities in specific sectors. I mean, Luxembourg, which obviously I can talk a lot about given that I live here, has created very specific legislation that allows for a much more open environment for tokenization and blockchain type, digital assets, essentially, as we see that as a key priority here. But customer profiles are very, very different across countries. I mean, one very obvious one, you talked about the digital banking environment in the Ukraine, in Germany, for example, the biggest European country, still only 50% of payments are made with a credit or a debit card. It's still a very heavily cash-based society. There are reasons for that. I won't go into it. Some of them are still linked to the communist era and the Stasi and being able to see personal data. A lot of it is also to do with the charges, but they have still a very cash-driven society. Whereas on the flip side, you have places like Luxembourg, I think Italy as well, are very much more digital in their approach, and people are more freer and accustomed to using digital means for payment. So there are clear differences in customers. I touched on already and mentioned what I think is the second key point, which is regulatory readiness. I must confess, I would not be able to tell you the regulatory regime in the Ukraine, but I would guess that it is different from that of the EU, given that it's not part of the EU. Regulation has become critical across the whole of the EU, and not just in financial services. I think one key regulation that may come as a shock to a lot of people coming into the EU is the General Data Protection Regulation, GDPR, which is applicable to anyone, which has really creates a lot of restrictions in the way you operate, in the way you store your data, in the way you engage with customers. I learned 2 years ago, and it's actually created an issue that I had to resolve over a weekend, using CC in emails where the people who are listed in that CC box do not know each other is essentially a breach of GDPR. We had someone complain to us saying, I did not authorize you to share my email address. Email addresses are considered personal information. As a result, we resolved that issue, but I had to tell my team, always use BCC, because you cannot share email addresses with other people without their consent. So silly little things like that. And I mean, it sounds ridiculous, but these are issues under GDPR. And then obviously there's a whole host of financial services regulations. If any of you listening are lawyers, you would do wonderfully in Europe, because I think only lawyers win in the end of the day. They're the ones that make all the money from all the regulations and legislation that's been put into place. Third key point is then talent and operations. I'll state the obvious. You've got to hire the right people, but critically, you need to hire the right people dependent on your target market strategy as well. People like doing business with people like themselves, right? But also understanding different cultural differences in the way people do business and the way they work. That's also a critical element. Not all cultures work in the same way. And you need to be able to adapt and be more agile with the way you structure your company to make sure you can get the best out of the people that you are hiring, which will inevitably be a plethora of different cultures and from different countries. And then critically, sort of, again, I'll just touch on it lightly because you just heard a lot about it, is the funding and the financial management. Access to capital is broad across Europe, but it does vary. And as the previous speaker was noting, you've got to know and be specific about how you're going to raise funds and be targeted with the way you go about raising that money.
Great, thank you. And what about product market fit? Is it the most important factor in scaling also in fintech area?
Product market fit is obviously always critical, but you have to understand it, I think, in totality, because to me, the critical element here is the market element, right? Again, as I mentioned before, customers, cultures, etc., differ vastly across the EU. And so product market fit is not a static thing across the whole of the 27 countries. It varies dependent on the customer needs and expectations, cultural differences, society, technology, adoption rates, risk appetite. You have a huge variation in risk appetite across the EU, going from the most risk averse, which are the Germans, which in itself presents challenges and opportunities. For example, opportunity, Germans buy more insurance policies per person than any other continent than any other country in Europe. The challenge then being is maybe if you have some sort of investment product or a wealth management product, Germans don't like investing in the stock market, or if they do, they typically will only target the main sort of German manufacturers and German industrial companies. On the flip side, you have Italy, which has the lowest rate of risk aversion and are very prolific in investing in public markets, don't really care too much about insurances, only when they have to. So you see that there are differences. If you're an insurtech or a wealth tech, you would choose very specifically where to go or based upon that, and your product market fit is, needs to be tweaked for each market. Within that, obviously, as well, you have the market readiness element. There's sometimes people are bringing products to market where the market isn't quite ready for them. I mean, historically, looking at great big examples, Google Glasses was way ahead of its time. Very cool product, but nobody wanted it at the time. Maybe today people are more adept to wanting and more, engaged in wanting to wear some sort of augmented reality specs, but 10 years ago wasn't ready. The operational execution element is obviously also key. You've got to be able to look at, well, executing today, but also executing effectively tomorrow. Can you scale your business effectively? One metric that I use, a KPI I use and I sort of propose to people in terms of effective scaling and tracking of KPIs to ensure that you're scaling effectively, particularly from the people perspective, is that I believe that every single new employee should contribute as much marginal income per employee as you previously had in your company, if not more, right? You should only be hiring people that will add at least as much income as you had before, if not more, right? And that stems right the way to what many people would consider traditionally cost-based activities such as back office, PAs, etc. You hire a PA in order to free up someone else's time, which ultimately leads them to sell more and generate more revenue, right? Because they're doing less of the admin, the PA will do a lot of that work. You hire a HR executive to take away the tasks from, say, the CEO or another executive so that they can go out and do more selling, right? So every single person to me is going to be contributing, should be contributing the same marginal income as you previously had. Obviously, again, regulatory compatibility is also part of product market fit, and you need to be very, all of this sort of ties in that you need to be look at very specific local adoption strategies and market entry strategies, right? Because the markets are different. What works in one market may not work in another, right? Some markets, digital advertising will get you, a lot of inbound customers. In other markets, you may have to use physical advertising. I mean, you and I live in Luxembourg. Luxembourg, be it that we do use, the rate of digital adoption and social media is quite high in Luxembourg. It's not actually particularly effective in terms of marketing and sales. It's actually, if you want to advertise a product, sometimes you're better off plastering it all over a billboard somewhere, right? And that could be more effective in Luxembourg because it's still quite a traditional culture, outside of our world of tech that we have. So yeah, you've got to be, product market fit needs to be agile, adaptable, and you need to be able to mold it depending on the different markets you have, right? I think the biggest mistake that a lot of startups make is assuming that what worked in one country will work across Europe without adaptation. You will need to adapt across Europe.
Yeah, I totally agree regarding adaptation. And how about to talk about cases? So through Loft went through many startups and scale-ups. So maybe you can give us one or two who like achieved product market fit convincingly for you, and which KPIs or factors like were totally convincible for you and investors? So this company now that they met product market fit.
Yeah, well, I can talk of a sort of a more established company now in Luxembourg and one of the newer entrants into the market, maybe to give you two reflections. The first one I'll talk about is Satispay. Now, Satispay originally was founded and started in Italy, but shifted its headquarters here to Luxembourg and operates its core management and operations out of Luxembourg. They are pretty much a unicorn now, based upon their last funding round. They're a payments firm, critically using mobile application, and they have, they've learned a lot of lessons along the way, because again, what worked in Italy didn't necessarily work in other markets. They've adapted. Luxembourg was a very good example. What I pointed out earlier, Satispay is a great example of how they realized that digital marketing was not necessarily an effective way of acquiring clients in Luxembourg. I'm sure you remember their posters were everywhere in Luxembourg, right? So they used old school marketing channels to acquire customers. So they adapted, right? Because most firms will say, my marketing strategy, I'm going to do this, paid ads, whatever it is online. It doesn't always work, depending on who your customer is. And so they really have understood their customer, which has paid dividends in terms of their scale and growth. They have well over 60 people here now in Luxembourg, with teams distributed across the European Union. Core market obviously is Italy. They do Luxembourg. I think they've entered Germany and France as well. So, a huge success for Luxembourg. And we love the fact that whenever they get the chance, they will still say that they want to move back into our loft incubation facility, that they miss being here. So that's a nice badge of recognition for us, I think. They miss the environment. A more recent example is a company called Infinite. Infinite is only 2 years old. Their last funding round valued them at 300 million euros. This is a little secret in Luxembourg that nobody really knows about that well yet. They provide AI-driven credit, so lending solutions to the SME sector, but with a very specific twist in that they use the lending, they provide lending. It's not on their own book. What they do is they get capital lines from various financial institutions. So they act as an acquirer essentially for the loans for other institutions. But they pass those on at no cost. So they don't take any brokerage fee on the loans. They use the capture of the loan or the temptation of providing easy credit to SMEs to make money on their platform solution. So underneath all of this, they're providing a platform solution for like a CRM almost, which targets specific sectors like the automotive sector, I think the healthcare sector, that helps businesses optimize their operations internally. As a result, they're acquiring a lot of data about that business, which therefore allows them to make better credit decisions and better lending decisions. Their non-performing loans are very, very low, but they charge the money on the operating platform, not on the loans, which is a very interesting model, right? So the loans are like a means to an end, but they're more effectively able to distribute loans because they have all the data, because they've got these platforms that have been instituted at all of these companies that they work with. And they've been very, very fast.
Sorry, and maybe this approach also helps them to avoid some regulation, no? Because it's not directly banking.
Well, it is. No, they still have to be considered a distributor. Well, actually, you're right. They do, because they can be considered a non-bank lender, right? So they use a special purpose vehicle. Luxembourg loves these sort of acronyms and setups of these complicated financial vehicles. We are the center for securitization across the European Union. And so SPVs are very common here, and they keep the money under a segregated SPV and they just channel it through, right, to a startup. So yes, you're right. They do, as far as I believe, they do avoid regulation as a result. Please don't do that. Don't try and avoid regulation. It's better to be licensed than to try and skip around it. Look at all the trouble that Binance gets into. That's all I'm going to say. Okay.
Good point. And so what are some key elements to factor in when expanding into Europe?
Again, it's really a summary of what I've said already. So choosing your first market strategically, do your research, right? I'm sure you'll have a hypothesis or an idea as to what may be right, but do your research properly. You know, these days with AI supported tools, even ChatGPT, it doesn't take that much of an effort to do research and to make sure you're entering the right market first, right? Because that will be key. Be aware of language barriers. This is one of the lovely things, I think, and part of the reason I love Luxembourg is the fact that we are able to cope with so many different languages. Whereas, you know, if you go to France, you're going to be dealing in French. Simple as that, right? Germany is a little bit more open in the big cities, except when you go really far west to like Munich. Munich is still very, very German. The Scandinavian countries obviously are widely spoken English, Netherlands, English. I would assume for most Ukrainian firms, they'd prefer English as a second language. But you really need to be aware. Italy as well, it was Italian, Spain, Spanish. You've got to be really aware of these issues and the nuances of those cultural words. You know, even naming products, etc. You've got to be aware as to what that word may mean in a foreign language, right? You know, there's been some famous stories of even big car manufacturers messing up, naming cars with some rude word in Spanish or something, you know, so you've got to be careful about all these things. So therefore, you have to be aware and embrace localization, right? I mean, typical structures, and this is what Luxembourg really is sort of the king of, is the control and conquer, you know, central command and control and distributed sales channels across the European Union, right? You know, Luxembourg is the home of most, you know, Europe's subsidiaries from America, Asia, etc., both in finance, in industry, but also now in fintech, right? You know, they set up their EU hub here. They have their management teams and their command and control center here, and then they have distributed teams across the other EU countries who therefore also have that localization, right? They know the local language, the customs, sales techniques, etc., right? And then managing your infrastructure setup, getting bank accounts, not the easiest thing these days in the EU with regulation, takes some time. So yeah, it's a summary of everything I've said.
Great, thank you. So if to continue talking about choose your market properly, let's talk also about different startup hubs in Europe. So we have several like main hubs. So could you please name them and to compare and help our startups who are listening us today how to choose?
Well, look, pretty much every country has a startup hub, and we work with and partner with most of them. But there are differences, right? And again, this is part of selecting and being selective in your strategy of growth and expansion into Europe. Look, be it it's not in the EU, London is still the king, I think, in terms of the startup sector. But you know, it's the greatest challenge is that it's not part of the EU anymore, right? Which has issues not just in terms of regulation, because being regulated in the UK does not allow for passporting into the EU anymore. But then critically also the taxes, right? You have to pay VAT and customs and excise even on services being deployed outside of London. But look, London is an amazing city. You've got incredible global talent access, but it's getting very, very difficult to source talent now because they have had such a curb on migration as a whole, right? And I know that there are some challenges, and economically, UK is not in a great place right now. Berlin is another hub that I've lived and worked in. I love Berlin. I think it's fantastic. A really energetic culture, very, very cool city, fantastic city. I think one of my favorite, if not my favorite city in the world that I've lived in. Great vibe. In Berlin, in the startup sector, English is widely spoken because you have a very, very international startup community. Negatives in Berlin, tricky. It's one of my favorite places, but in financial services and fintech specifically, which is, you know, what I do, the negative is that you don't have a local customer base, right? I mean, if you're doing B2C, sure, yeah, you have a local customer. But if you're in the B2B market where you're providing solutions to other financial institutions, they're all in Frankfurt and Munich. They're not in Luxembourg, in Berlin. So you're going to have a bit of an issue and be doing a lot of commuting. Plus, talent retention is a bit tricky in Berlin. You see a lot of churn in businesses because, you know, people are jumping from one firm to another every 6 months to a year. I'm not kidding you. I remember we grew our company there from, you know, 3 of us to over 180 people in about 16 months. And I mean, the churn in people, not through our choice, because they were jumping around, because there's so much demand in the startup sector and people are jumping around. I keep trying to explain to these young folks that you're not building a career and your CV looks disastrous if you're only working at places for 6 months to a year, but they don't seem to care. So anyway, Berlin is great. Great nightclubs as well, but you need to learn some German to get into them and look as scruffy as possible. It's one of the opposites of getting into nightclubs. The best nightclubs in just about any other city, you need to dress up. In Berlin, you've got to go in torn jeans, trousers, messed up hair. You know, the more ramshackle you look, the better, easier it is to get in. Amsterdam, great place, a little bit isolated, I have to say. Very expensive property prices, very difficult to live there nowadays. Arguably one of the most expensive places to live. Again, connectivity, yes, you have a local market, relatively easy to expand into Belgium from Amsterdam. There are some nuances, especially in fintech, again, on a B2B side of things. You have just a few Dutch banks, really, and a few other financial institutions in Amsterdam, which is maybe the downside. But again, great place, speaks English as well, and most people in the Netherlands speak English. I do like it, very flat, and you need to get used to riding a bicycle, because that's how everyone commutes. Paris, French. I mean, I don't really want to say more than that. I'm sorry. No, I shouldn't say that. I was married to a French woman for 20 years. Maybe I have an aversion because of that. Paris has improved a great deal over the years. I remember the first time I went to Paris on my first business trip about 27 years ago. And, you know, even if you tried to speak French, but you spoke it badly, they would like spit on you. It was like that, right? It's improved. People do speak English now to you in Paris. They don't like it, but they do. Paris, I mean, France has, okay, let me point out, it has some great infrastructure. It has some great setup. I mean, Station F is incredible facility out there, well, the biggest hub in the world, I think, or in Europe at least. Here's the problem, wealth tax. This is very important for startups. The French government will want a share of your intangible value. So if you have raised money with your startup, let's say, you know, you raise, I don't know, a Series A of 10 million, it values your company at say 30 million, right? So it's, let's say you've kept 30% of the shares. So technically on a piece of paper, you are worth 10 million, right? Nearly. The French government will expect you to pay taxes on that, even though it's not real money. They have a wealth tax, right? This is their biggest downside. Secondly is labor laws, very, very restrictive labor laws there. Nigh on impossible to fire someone. I mean, and sometimes those issues do arise, and very restrictive in terms of the working hours, pay, etc., etc. It's one of the worst. I mean, when you talk to large employers, they'll tell you it's one of the worst places in terms of labor law. And that really was nailed home when you saw Brexit and where the big financial institutions moved. Even though Paris tried to court all of them to come to Paris, Macron laid out a red carpet for them all. Very few actually chose Paris. It was only the banks that had a traditional French background that chose to relocate operations to France. No one else did, right? Which says a lot. And a lot of it had to do with labor laws, quite frankly, and English. You cannot, they claim that they can process regulatory applications in English. They can't in reality because they don't have people at the regulator that speak good enough English to do so, right? I could go on and on. We could talk about Luxembourg. Maybe I should talk about where we live, right? Luxembourg's the best in the world, isn't it, Ina?
Totally agree.
We're the
And let's try to convince Ukrainian startups why they should come to fintech startups, why they should come to your
languages. It's incredible. You know, the official statistic in Luxembourg, for Luxembourg, is that the average number of languages spoken fluently, and that's key, they have a measure as to what fluency is 4.5, right? Now, that statistic includes idiots like me that speak one, right? You know, how many languages do you speak?
fluently?
Yeah.
3.
There
And
you go.
plus, I can understand German and French.
Okay, but you're still on the low side, right? I mean, how many people do you meet that can speak like 6 languages perfectly in Luxembourg? It's like so common, right?
Yeah, all my Luxembourgish friends.
Exactly. I mean, genuinely. And so you can have the great thing about that for business is that you can, again, you can have this command center here and people sort of dealing out of Luxembourg and dealing with the whole of the European market, right? Italian, Portuguese, German, French. I mean, that's easy in Luxembourg, right? They're all over the place. Then you get the Swiss Deutsch and the all this kind of stuff as well. It's easy. And critically, as a result of what Luxembourg is, the support services are all geared towards international business, right? Because nobody comes to Luxembourg to do business really in Luxembourg. It's 650,000 people. They come to do business with Europe and beyond. And so like the law firms, the advisory firms, all the support infrastructure, they are the masters of doing international business. They understand regulation across the EU. They understand the rules. They understand business. So the advice and support you'll get here is incredible to be able to expand globally. That's why so many firms choose Luxembourg as their regional headquarters in the EU now. The regulation, as I said, you know, we're all constrained by the EU. But the benefit you have in Luxembourg is that you go and speak with the regulator. There are very few, it always shocks people in finance when they come here that they go and meet with the regulator and have face-to-face conversations and can call them up. You know, it's really different. You don't just send through a bunch of forms and emails, you actually go and have a chit chat with them and they advise you, you know, about your process of application, etc. You know, internationalism, I mean, 50% of people that live in Luxembourg are foreigners, right? And then 160,000 commute into Luxembourg every single day from France, Germany, and Belgium. You know, it's really international, particularly in Luxembourg City. It's beautiful, but you also have access to the rest of Europe. You know, Paris is 2 hours away, be it if the trains are running, and the French are always on strike, remember that as well. So it's about 2 hours to Paris, it's 2 hours to drive to Frankfurt, 2 hours drive to Brussels. Next week I'll be skiing in the Austrian Alps. That's 7 hours drive away. I mean, I love the fact that, I mean, coming from the UK, I love this thing where I can just drive everywhere, and it's wonderful. But you know, to be able to go around and see all these different places. Belgium, France, and Germany are half an hour's drive away, right? It's great. I love that. People are great here. I think one of the key things that I've always pointed out to people is this genuine collaborative attitude of Luxembourg. People work together to make things happen. And there are very few airs and graces. You can go and you will bump into CEOs and very senior politicians at the grocery store, at events all the time. And they won't act like asses like you can get in, say, other places, right? You can get direct lines to very, very senior and influential figures very easily in Luxembourg because it's a small community. And then just normal people and nice people. I was chatting to someone, it was last Wednesday, and she said, "Oh, I was in the supermarket and the Minister of Finance was buying a carton of milk next to me when I looked up," and she had a chit chat with him. I mean, it's not unheard of to bump into the Prime Minister at the gym. You know, it's nice, right? And as a result, you know, you can make things happen. The logo really does make sense. You know, I feel that part of the energy that you get from even from foreigners, actually sometimes even more so from foreigners, is that you believe you can make a difference, right? Not just to Luxembourg, but bigger. Because Luxembourg, when it comes to finance in particular, has a huge voice across the world. 5 trillion assets under management. We are the biggest fund management hub in the world outside of the US. Nothing comes close. Not London, not Switzerland, not Ireland, not Singapore. We are the biggest. I've seen this fantastic map, which we sometimes distribute, where all the countries of the world are resized by cross-border financial flows. Luxembourg is the 3rd largest country on the planet in terms of money going in and out of Luxembourg, right? So you have a huge voice as a country, and as a result, therefore, with the access you get, you can have a huge voice, right, and make a difference. It's neutral. It's always considered conciliatory. It's why we've had quite a few presidents of the EC, because we act as that neutrality between the French and the Germans. Juncker obviously being the most recent. There was Thierry Santerre as well. They have great sparkling wine, Cremant, as well. That's also very important, I think. And a great steaks. I think the steaks here are fantastic if you like meat. Vegetarian food, it's okay. So if you're vegan, yeah, it's okay. Anyway, that's enough, I think.
Yeah, thank you so much. You really sell Luxembourg, so I expect many startups gonna text us for a first meeting contact. And we've got 4 minutes, and we had several questions. If you don't mind, I will shoot on you. So first one is from Maria. How should fintech startup approach a partnership with banks and financial institutions?
Slow. You need to build a relationship first. Don't go bulldozing in and say, hey, this is me. I want to talk to you about a partner. You've got to try and use a network to reach out. That's part of the role we play here in Luxembourg, is to facilitate, brand recognition, introductions, etc. A soft approach is always best, being it's not always logic in business. You need to go in and people need to like you and meet you and trust you, and then you start building up that partnership.
Great. One more question, and yeah, we can talk about it a lot, but we don't have a lot of time. So what kind of a mindset or key habits have you seen in the most successful fintech founders that set them apart?
Well, I think there's a lot, and the intangibles, and different people say different things. But I think one of the key things, even when I do investments, I don't mind arrogance at all, right? Arrogance is fine. But arrogance to learn, or the arrogance to think you know everything and know better than everyone else, that is a track to losing, right? I believe fundamentally that everyone, should be engaged in continuous learning. Everything, every experience is an opportunity to learn, and that you should be listening to everyone around you, particularly those that may be, in fintech, traditional banking, finance, etc. Those people that have been doing it for a long time. Don't just dismiss them because they got white, gray hair and wear a suit and a Hermes tie, right? They know what they're doing. They've been very good at it, otherwise they wouldn't still be bankers. You've got to listen. And you've got to learn from these people, and don't be dismissive. I often meet founders who are just totally arrogant, and they'll argue with you about everything. Don't do that. I won't give you money, and quite frankly, most VCs won't give you money. You've got to be able to learn, because learning is then critical to driving adaptability, agility, and flexibility, because you have to be. I mean, so many firms I know have look completely different after 5 years than what they originally planned initially, right? You've got to be adaptable, and the only way you're going to be adaptable is by the ability to listen and learn. So to me, that's a critical track, and good leadership, right? There's different, you hear some horror stories about very militaristic leadership, shouting at people in the office, this kind of stuff. Treat people nice. If you want to get the best out of them, be good to people. We live in Europe, and Europe, you have a level of culture and education where we are more, we're not like in a developing market where you need to really be bashing people, what their main goal and objective is money. Here it's, you know, people are sort of pushing for self-actualization, you know, and bigger things. So you got to treat them well, because I think if you treat employees well, as Richard Branson once said, it's the customer doesn't come first, your employees come first, because if you look after your employees, they'll look after the customer. Simple as that.
Totally agree. Thank you. And one last question.
Sure.
So, is there any programs that open for Ukrainian startups at Loft? You had amazing program.
We did last year, yes.
Yes, but maybe this year.
We have very specialized programs. So most of our largest suite of programs focus on developing markets, so Africa, Asia at the moment, and probably Latin America next year. We do have a focused program on green fintech, so firms that are doing things related to sustainable finance. So technology firms that will be running again this year. We're running that for the next 3-4 years. And we have a much larger program, though not really suited to startups. It's more about infrastructure, which is called Catapult Future Foundation, which is really about developing core infrastructure for the Luxembourg financial services sector. And that's really for slightly larger technology companies.
Okay. And for this green program, are Ukrainians eligible?
Of course, any companies from all over the world are eligible.
And is it application form in your website?
It's not open yet. The program will run in, I think, September or October. I'm not exactly sure. So the applications will probably open just before summertime. So
okay, great. So, dear listeners, we promise you to publish it in Seeds of Bravery LinkedIn page. So please follow us, and you can apply for upcoming Loft program. Nasir, thank you so much for sharing and for your experience and taking your time. And see you soon in Nexus.
Valuable. Okay.
Yeah.
Thank you so much for an amazing fireside chat. Thank you, Nasir, for joining us and supporting Ukrainian deep tech startups here at our Fintech Soft-Landing Workshop. Thanks. And thanks, Ina, for an amazing moderation. Dear participants, we are moving forward, and next block will be dedicated to legal requirements, to everything related to regulations and everything you need to know about it. And I'll just share my screen. Just a second.
Anastasia, I think we are sharing our screen now. Should I
yeah, sure.
stop sharing it?
I'll just, can you see my screen now, Aline?
I think I'm seeing my screen.
If you can see the slides and that works, so
yeah,
we can continue
exactly.
like this.
It's the slides.
Okay. I just wanted to say, tell our participants that, as I mentioned before at the very beginning, we have amazing two experts from DLA Piper or our associated partners of Seeds of Bravery, and we're very grateful that Nicholas and Aline, that you've joined us and will share your experience and insights on the legal and regulatory framework in fintech. So I'm stopping sharing my screen, and the floor is yours to present. Thank you.
Yeah, thank you, Anastasia. Thank you. And yeah, thanks, Anastasia. Thanks, everybody involved in this great initiative. So yeah, we will talk about a topic which I understand is in the continuity of the previous presentation based on what I just heard, which is about regulation in financial services and fintech sectors, which is a very important element for you to consider when you want to launch a new business. So I am Nicolas Calocuris. I'm lead lawyer at DLA Piper in Brussels, in Belgium, specialized in financial services and fintech regulations. I have also an additional function at Brussels University, where I'm assistant also in financial law. And I'm here today with my colleague, Aline.
Hi, everyone. I'm Aline Kiers. I'm a senior associate at DLA Piper as well, but in the Amsterdam office. I'm specialized in financial regulatory law, focusing on fintech. So the topic is very close to the heart. I'm also a tutor at the law firm school, so teaching lawyers on financial regulatory law. As I just said, Nicola and I are both from DLA Piper. So we've included a couple of first slides on DLA Piper. DLA Piper is a global law firm with 90 plus offices in 40 plus countries. And it's a full service law firm, so specialized in matters on financial services, for example, but also anything that comes related with having a business in, well, in a international setting.
Aline, sorry to interrupt you. We can't see your screen. Are you sharing something at the moment?
Oh, I can see the slides.
Abby, maybe can you say?
Yeah, we can see the slides too.
Okay, so it's just me. Sorry about.
No,
sorry
thanks,
for you.
Yeah, thanks for flagging it. We included a map. We won't go over the details here, but just wanted to show them, and you're always free to have another look at it, of course. When advising on financial services and fintech, there's a lot more than the regulatory scope of things. Just now, you raised a question to Nazir on partnerships. That's a typical thing, commercial contracts. And outsourcing is something that then comes into scope. Employment, litigation, once there is a discussion on things, etc., etc. And we go even a step further on that depending on the specific financial service you are providing, there are different items you could think of. Well, Nicola and I have a very broad experience with these services and are therefore happy to talk you through this afternoon. So for now, Nicola, I give you the floor.
Yeah, thank you, Aline, for the introduction. So I would like to start with a general statement about the EU financial services regulatory framework. So what is important for fintech to understand, and I'm sure most of you already know it, is that the financial services sector in the European Union is extremely regulated, which means that offering and providing financial services is regulated. So only certain entities which are regulated are allowed to provide, but also offer financial services. The fact that the financial services sector is regulated also means that prior to provide your financial services, you generally will be required to obtain a license or an authorization to carry out your business. And this authorization, you will need to obtain it from the national competent authority. And of course, there is a whole process to be followed. We will go through that later. If you want to be granted a license, you will be required to comply with a set of prudential requirements that can be more or less burdensome depending on the license you're seeking to obtain. But in addition to the license, when you provide services to your clients, you will also need to comply with additional requirements, which are called rules of conduct. So if we go on the next slide. When you want to launch a fintech business, there are three key questions that you should ask yourself. The first one is, are the financial services we plan to offer regulated? So is the business model we envisage a regulated business model under EU financial services or fintech regulations? And if this is the case, you need to ask yourself a second question. Which license, which authorization do we need to seek from the regulator? And what are the conditions we need to fulfill in order to obtain the license? And then the third question you need to ask yourself, what are the rules of conduct I will need to respect when providing services to clients? So what are the specific requirements I will need to take into account when providing services with clients? what we hear most of the time from fintechs, because we advise very regularly fintechs with such assignments, is our firm wants to do this type of services X for specific types of clients, client Y, in a specific jurisdiction, a specific market Z. The question we receive most of the time will be, is our business model, is our activity regulated, and do we need authorization? And I think, Aline, you need to click a bit more on the slide to have the full text. This is not necessarily an easy question. So maybe one more time. Yeah, perfect. This is not necessarily an easy question, assessing whether the services fintechs intend to provide are regulated. Because most of the time you can have a couple or several regulations that are likely to apply. And if we take an example, let's imagine you are a fintech, you want to provide a specific business in which you provide clients with deposit accounts. Through the deposit accounts, they can the clients can execute transactions, so there is a payment functionality, but also with an investment-linked variable interest. So if we take the services you intend to provide with the specific types of clients you target in a jurisdiction, in this example, there's likely 3 regulations that could apply. First, if you want to provide deposit accounts to your client, it's likely a banking service, a banking activity, which is regulated under banking regulations. But there is also a payment functionality. So this is also likely to trigger payment services regulation. And of course, the investment-linked variable interest is also likely to qualify as investment services. So that could trigger investment services regulation. So we will go back to that later, but scoping, legally qualifying the services you want to do is an extremely important step that fintechs need to make sure to conduct, because this will give you an idea of the rules you should comply with. And in our example, and on the slides, I put on the right part crypto assets, because in this example, there is nothing related to crypto assets. So obviously, this is not a regulation that will apply. So this legal qualification will also help you understand which regulations could apply, but also which will not apply. So the first question you should ask yourself, are the services we intend to provide regulated? So as I said, the question we receive most of the time from fintech is always, do the services we intend to provide fall in the scope of a regulatory framework? And when we receive this question, what we need to do is to assess whether the services that fintechs intend to provide could be subject to financial or fintech regulation. So we need to give a legal qualification to the services fintech want to do under EU financial law. And so, in other words, what we need to do is to assess whether the services a fintech wants to do fall under the scope of EU financial law. And assessing the scope of application involves verifying 4 aspects: subject, person, time, location, that we will now describe a bit further on the next slide. So there we go. We have the 4 elements. So when you will need to verify whether the services you want to provide are regulated, you will first need to assess the material scope of application of regulation. So EU, FS, and FinTech regulations, they are generally built the same way. They apply to a specific scope of services. We'll go back to that in a minute, but each fintech or financial services regulation applies most of the time to a specific list of services which are defined. So when you assess if your services could fall under the scope of a regulation, you need to verify what are the services regulated by the regulation, and you need to verify whether the services you could do could qualify as a regulated service. Sometimes there will also be a next step. You also need to have a look at the financial products. For example, the directive on financial instruments applies if you provide investment services on financial instruments. So there is a double check to be done sometimes. And something very important for fintechs the scope of application of regulations is defined in the regulations, but you also have exceptions or exemptions. So if you provide your services in a specific way or on specific products, you can benefit from an exemption or an exclusion, which is specifically provided in the law. And I can mention, for example, under the payment services legislation, PSD2, there is a very important exemption that a lot of payment fintechs use, which is the LNE, limited network exemption. So if you provide a payment instrument that can only be used in a limited network, you are not subject to the regulation. You don't need to apply for a license. You don't need to comply with the rules of conduct. So this is extremely important to legally qualify your services. Then the second step is to assess the personal scope of application. Some regulations only apply to specific types of entities. There are conditions that need to be met sometimes. For example, if I take again this example of the Payment Services Directive, PSD2, the directive only applies to those providing payment services, but on a professional basis. So if you don't meet that condition, you are not subject to the rules. So this is an additional element extremely important for you to verify. The temporal scope of application is something very important also. Laws, legislations in the EU are very regularly amended. So there are changes that will come in the future. So it's important for you to make sure as of when you need to comply with specific requirements. And the last element is the territorial scope of application. Most of the time, EU regulations will apply to fintechs. Either is the fintech is physically located within a member state of the EU, but sometimes also if you're outside of the EU and you target the EU market, the fact that you offer services in the EU can also imply that you need to comply with EU fintech regulations. So I talk a lot about regulations. There are two important different types of regulation that need to be considered. The first one is what we call sectoral regulations. Sectoral regulations are those that apply to specific financial services. So depending on the type of financial services or fintech services you want to provide, you might be subject to specific sectoral regulations. And I listed some of them on this slide. So the provision of investment services in the EU is essentially regulated by a directive called MiFID II and complemented by a regulation called MiFIR. The provision of banking services is regulated by other EU legislation, which is the CRD, Capital Requirement Directive, and the CRR, Capital Requirement Regulation. Provision of payment services, I mentioned that already, but this is essentially regulated by PSD2, so the Payment Services Directive, which has been very important for fintech because, as you probably know, PSD2, the text entered into force 2018 and provided two new forms of payment services, which were open banking services. And you could see that there were a lot of fintechs making use of those new options provided in their PSD2 to offer open banking services. If you want to provide services with regard to e-money, the applicable text will be EMD2, the Electronic Money Directive. Crypto services are now regulated since 2 months, a few weeks. There is this new MiCA regulation, Markets in Crypto Assets regulation. And finally, if we have a look at insurance services, the activity of insurance undertaking is regulated by a directive called Solvency II, while the distribution of insurance product is regulated under a text called Insurance Distribution Directive, the IDD. So this is very important for you to understand how to legally qualify your services, because this will help you understanding which regulation you might be subject to. But of course, there are other regulations you will need to consider. Those are the transversal regulations. Those, contrary to the sectoral regulations we see in color in the middle of the slides, they don't apply only if you provide specific investments, specific financial services. They have a way broader scope of application. For example, a fintech might likely come into possession or make use of client data. And in those circumstances, the rules under the General Data Protection Regulation, GDPR, will need to be complied with. Maybe you will want to make use of AI automation. In this case, there are changes that you would be subject to the AI Act, which will soon enter into force in the EU. There are a lot, of course, of ESG rules in the EU on the ESG, sustainable finance, a lot of ESG reporting that require financial institutions, but also fintech sometimes, to report on their ESG performance and or how they consider ESG factors, for example. Consumer protection is another very cornerstone area. The European legislator, the regulations, all of them are really built around this idea of strengthening consumer protection. There are a lot of text also in the sectoral legislation. This is a very important element you need to consider. Something that is not on the slide, but is of course also AML regulations, so the regulation on anti-money laundering, which are very important to consider for financial institutions and for fintechs. So this gives another view of all the regulations to which you might be subject if you want to launch a regulated business. And I think here, Aline, you wanted to add another perspective also. I think you're on mute, Aline. There you go.
A typical mistake that keeps happening. But Nicola, you already mentioned the prudential requirements and the ongoing conduct requirements, and there are many ongoing rules you will have to comply with if you're a regulated financial company. And this slide sets out a couple of examples and in certain areas. So if we talk about conduct, general conduct, you could think of the way you remunerate your staff is regulated. Provision, so an inducements, for example, your agreements with partners and how you pay each other for certain services can be regulated. Same as professional competence, your staff might need to follow trainings before they are able to be active in the market and talk to consumers or clients. Almost all of these rules have been established to protect the interests of consumers and business clients. Another one, for an operational perspective, you will have to submit a business plan with your regulator. You will have to describe in detail how you will conduct business, how you will market business, how you expect to make money, and how you will run your day-to-day operations. What will happen if an incident take place? If you have a data breach, for example, that is all described and reviewed by the regulator. You will have to have in place a lot of policies in that regard. So, for example, for those incidents, you will have an incident policy in place, but also you will have a conflict of interest policy in place, an outsourcing policy, anti-money laundering policy, etc. Prudential requirements would basically see on the money perspective. So what is your capital that you need to start your business? Are there specific liquidity requirements? And do you need to segregate funds from your clients? And how do you need to segregate them? The exact rules all become clear if you know in which specific rule applies. And if that's clear, these rules will typically be described for you. Let's see.
Thanks, Aline.
Yeah, Nicola, go ahead.
Yeah, thanks, Aline, for the useful precisions. Another aspect fintech should keep in mind is that the financial services regulatory landscape at EU level is constantly evolving. On the one hand, existing financial regulations are amended, but in addition, also new regulations are being introduced. For an example, some examples of regulations that already exist but that will be amended in the future. The provision of investment services, I mentioned that is currently largely regulated under MiFID II and MiFIR. In the future, we'll have MiFID III and MiFID II. So there are already new texts that will amend the existing rules. PSD2 in terms of payment services will also be amended in the future. We'll have a third directive, PSD3, but also a new regulation, PSR, the Payment Services Regulation. The same goes in terms of AML, in terms of banking services. It's the constant process. The legislator, the European legislator, identifies new trends, new risks, new services, new practices that they want to consider in the law. So they amend the legislation, and it's an important exercise you should do if you are regulated under a specific prudential regulation. You need to follow the evolution of the text and understand what could be the impacts for you. At the same time, you should also pay attention to the new financial services or fintechs regulation which are introduced. I mentioned earlier the MiCA regulation. This is a new regulation that came into force in full less than 2 months ago. DORA is also a very important piece. The regulation on digital operational resilience for financial firms also came into force a month ago. There are new regulations on instant payments, on AI, open finance. This is something you really need to follow. But then the question is, okay, but how do we do? How do we stay updated of all those regulatory changes? Well, I don't have a magic stick. Unfortunately, there is no magic answer, but there are solutions that exist. So from the beginning, I would advise all fintech to ensure sufficient internal resources for legal and compliance services. This is very important. You need to have legal specialists in your fintech because the sector is extremely regulated. So you need to have somebody to follow up. But sometimes it's not possible. Maybe you don't have already a legal team or a chief legal officer. So in this context, you should seek external assistance. For example, from regulatory specialists like specialized law firms, which can provide you with what we call regulatory watches. So it's a service by which a law firm or a third party analyzes all the new regulations that are being published and sends you a report explaining what would be the impact for you. So those are, of course, very useful tools, and that's something we do quite regularly for different types of clients. If that can help you, also put a link. I think you will receive the slides afterwards, a link towards our financial services regulation blog. So anytime there is a new update, an important decision from the Court of Justice, for example, we publish a small blog post to alert our clients about this actuality. So this is also something that could help you in this regard. So as a sort of summary, it's very important for fintech to understand with precision whether the services they want to provide fall under the scope of regulations. So to do so, what you need to do is identify the sectoral financial regulation that could apply to the services, to the business you intend to set up. And then you need to verify whether the services you intend to provide to your client fall under the scope of those regulations. In addition, you also need to assess the possible application of other transversal regulations. That may seem easy as I say it, but I told you already earlier, it's not necessarily easy. And we have seen decisions, for example, from the European Court of Justice, where there are a lot of questions on the legal qualification of financial services. In this recent decision rendered a year ago by the Court of Justice, a national court was asking the European Court of Justice to clarify the distinction between payment services and electronic money services. And it's very important because if the services you intend to provide fall under PSD2 or under EMD2, you need to obtain a different license. You need to comply with different rules. So this qualification is extremely important. But there is another element that brings another level of difficulty in this analysis, is the innovative nature of fintech products, the emergence of new business model, of new services, of new technology. We've seen in the past years new products appearing on the markets, and there were a lot of questions on how you should legally qualify those services. I'm thinking, for example, about buy now, pay later services provided on a blockchain, virtual account number, P2P lending, or the use of AI to provide investment services like automated investment advice, credit scoring, other forms of AI in financial services. this leads to the question, because those innovations were not the European legislator, when preparing the EU legislation, did not envisage those new technologies, because the rules have now built for like 10 years, probably for some of them. So this adds another level of difficulty in the legal assessment. But against this difficulty, there is a principle that has been set up by regulators and legislators, is the principle of the technology neutral approach. So as I said, there is a lot of innovation, so it's not always easy to assess if an innovative service falls under the scope of regulation or not. At the same time, the legislator has the objective that the regulation remains relevant and fits for purpose over time. So they developed this technology neutral approach where, to assess whether your services are subject to a regulation, the focus should be given on the services being provided and not on the underlying technology. So the use of a technology in such is not decisive to assess whether your services are regulated under financial regulations. And this is very important because a number of financial regulations are built around this principle of technological neutrality. PSD2 for payment services, MiFID II for investment services, MiCA for crypto asset services, also the AI Act. So whatever the underlying technology you would use to provide financial services, you might still subject to those regulations. And why is all I say important? So I say we're contacted most of the time by fintechs who want to assess whether the services they intend to provide are regulated. But sometimes we're also contacted by other fintechs at a later stage, most of the time, which come to us and say, look, we received this letter from the regulator. The regulator is telling us the services you're currently providing are actually regulated. You're already providing those services without the license. We want more explanation. And then clients come to us and they say, oh, we didn't know the rules. We were not aware of all those rules we're supposed to comply with. We should have applied for authorization and comply with the rules if we knew. Because indeed, there are a lot of risks if you don't conduct the legal assessments I just explained. So the first risk is the risk of regulatory enforcement. So the risk that a regulator has a look at your activities and impose you an administrative fine, because they consider you not complying with the rules you should comply with. There is also a risk of civil liability towards your client, towards your counterparty, if you don't have the appropriate license. Risk of criminal sanctions. Also, some regulations provide for criminal sanctions if you don't comply with the rules. Also, money laundering, if you provide financial services without the appropriate license, the benefits you will generate will be considered as coming from an illegal activity. So you will actually be conducting money laundering too. Then all of this, of course, comes on top of reputational damage towards your clients, which leads also to investor mistrust. So in a nutshell, legal and compliance are really key elements that fintech should consider from the early stage of the project.
Thank you, Nicolas. So then I'll deal with the second question that comes up. Which license do we need and what are the conditions for obtaining it? Some of the points are already briefly addressed, but I'll repeat them, is that the license is to be obtained with a national competent authority, and that is the regulator of the country where the company has its seats. The process and the steps to get that license are fixed. They are usually set out in the applicable law or even in the practical guidance from the regulator. Usually we do see that a regulator gets into a conversation. I'm sorry about that. Sorry, that was my phone. Usually the process and steps are fixed. We do see also what Nazir addressed is that a regulator enters into conversations with license applicants. So several rounds of comments are possible. And that is also why we advise license applicants to start with informal discussions on the project with the regulator early in the process. There are a number of rules to be complied with to get that license, the prudential and the conduct requirements that I already addressed slightly earlier, which often includes the capital requirements, the ethical and careful business conduct, governance, and fit and proper policymakers. So which license do you need? There are many different licenses to be obtained. So it depends how your services actually qualify. We've listed the most common financial undertakings, financial products, and financial instruments here. Depending on what you offer, it will be determined which license you require. That is why for financial regulatory lawyers like me and Nicola, the exact circumstances of what you offer and the legal definitions are key in determining which license is required and which rules apply. So when we have determined which license is applicable, we usually see a license application process or an authorization process if the license is not required in a couple of steps. They can be divided in the same steps that we see. So there's a preparational phase in which you discuss with your advisor which services you exactly provide and how they would qualify under the local law. Normally, we advise to draft a sort of memo in which parties can make sure they are aligned. Based on that memo, you can have a conversation with your regulator and discuss, potential issues or points of attention. After that first conversation, you'll have the consolidation phase in which you will compile all the information required for the regulator. This is a very onerous process as regulators tend to look at every single detail. So it's not a checkbox exercise. For example, that conflicts of interest policy, it's not a checkbox. It is the regulator wants to see the actual policy and will check if it aligns with your business plans and the risks of your envisaged business. And this is just an example because there are many, many policies that you will require. Well, after submitting all those documents, the regulator will check if all the documents are there, all the information is complete. And after they confirm that, the real consideration period will start. And usually that is between 3 and 6 months. That consideration period is paused every time the regulator asks a question. So when they are reading through your business plan and they have a question, they will stop the clock, so to say, raise that question, and the clock will only start running again after you've provided them with a sufficient answer. Well, after that process and you've obtained the license, you'll probably be able to passport that license into the rest of Europe. That's at least the case for most of the licenses. We'll address passporting later in this slide deck as well. Important part of the license application process is also the screening, the natural person screening. Co-policymakers and supervisors and qualifying shareholders are screened by the regulator on reliability, suitability, and reputational, their reputation in the market. So a co-policymaker are the natural persons that determine the policy of the company. So normally, for example, the directors of a company, but it could also involve a management layer that is not directly a statutory director. The qualifying shareholder is not only a 100% shareholder of the company, it is any shareholder or entity or person that holds more than 10% of control directly or indirectly. So that means that those qualifying shareholding screenings go through your corporate structure for each shareholder that has 10% or more of the shares, voting rights, or equivalent degree of control. The general timeline then, what we normally see in the license application process is that it takes around, well, 1 to 10 weeks to prepare in the first phase, to take 9 weeks extra to consolidate all that information, and then to submit that application with the regulator only before the consideration period starts, and which will be stopped by those questions from the regulator. So often when a regulator indicates that the consideration period is 3 months, in practice that will often result in, for example, 5 months, just because of those questions and the clock that stops now and then. Finalization is a quick phase. Passporting goes relatively quickly for most of the countries. It depends a bit for country by country. Then the passporting system, as most of the licenses are based on those European directives and regulations, which Nicola already showed you. And there is a general framework that applies for all the countries in the EU. There's often a passporting regime introduced. And that means once you have obtained a license in one country, you can use that license in your other countries as well, in the other EU countries, that is. That means that you don't have to request a new license. For example, if you're licensed in the Netherlands, you can offer your services in Belgium without having to obtain a new license in Belgium. You could offer those services on a cross-border basis, so that's a non-establishment basis, or on an establishment basis by creating a branch in the country of interest. This passporting regime is often seen as a very good advantage of the European market. It is really helpful. However, you do need to check it upfront. For example, consumer credit offering is, for a large part, regulated by a European framework. It, however, does not have a passporting system. That is different from the banking license that does have a passporting regime. So the devil is in the details here as well. So then sorry, I hear.
Yeah, it's me. I'm so sorry to interrupt. We need to wrap up the session. How much time do you need to finalize?
Not too much. This is the last slide, actually.
Oh, okay.
Yeah, because it would be good to have indeed a couple of minutes for questions as well. This I'll keep it very short, because this is generally what we have addressed before, that there are many different rules of conduct to be complied with, and it is a very, well, you should think of different aspects that need to be taken into account and different rules. So yeah, it is mainly the rules that I already addressed, and each of those topics that I've listed on the left will have their own subset of rules. And again, this goes into detail, but I won't go into detail for today, but it's good for you to be aware of that. Almost each aspect of your business will be regulated. It's not only the financial services itself, it's also your staffing, it's also your role in society, it's your business operations, it's your clients, it's how you communicate with them, etc. So that was more or less it. This was a final slide on how detailed regulations can be, and this is a Dutch example with all the different degrees that can apply. It's just an example of that level of detail that applies. So for now, we'll stop here and open up for any questions you might have.
We have one question. Is there an EU passport for insurance services? Asked by Serhi.
That is a good question. There is for an insurance company, but you also have insurance distributors, so intermediaries, agents, advisors in insurance, and generally a license or a European passport applies. There is one discussion point for those intermediaries and agents that has a sort of issue in one of the directives. That insurance distribution directive is not entirely clear if there's also a passport for both agents and intermediaries, but the current position is that it is one way or the other in consultation with your regulator possible.
Thank you so much, Alina and Nicholas. I think your presentation was such a step-by-step guide on the legal world that I already received one message from our startup participant who are saying, I will put this into the how it's called, the quotes and use it as a step-by-step plan. So thank you so much for your time and your dedication to Seeds of Bravery beneficiaries and to developing Ukrainian tech ecosystem. Really appreciate your time.
Thanks for having
Many
us.
thanks. Yeah, our details are in the slide. Should there be any further questions?
Thank you. And we are moving forward right now. We will have an amazing last section, which will be dedicated to the panel discussion with our Ukrainian entrepreneurs, with our startups who have already been there, who's gone through some challenges, and will be happy to share it with you. And this panel discussion will be moderated by Elizaveta Bordanova. She's a director of communications and content and ex-editor-in-chief Vector. And we have 4 speakers today. It's Denis Halenko, founder at Allpass AI, Lyudmila Tymoshenko, founder at Agri Analytica, Sofia Sherbanyuk, head of business development and Spendbase, and Oleksiy Oleksashin, CEO Easy Peasy InsurTech. So Elizaveta, the floor is yours, and to all the panelists, good luck and thank you for making time to share your perspectives and your insights with us.
Hi, everyone. It's a great pleasure of mine and a great honor to moderate this discussion today. So basically, let's overview our main goals here today is to provide our dear guests with challenges and real-time experience and basically your positions, your overview, your experience from fintech entrepreneur. To warm up, I would love to begin with each of you, and maybe you could specify briefly what's your product about, your main points of business model, and also there is a question to each of you, since Anastasia has already introduced everyone. Yes, thank you so much, Anastasia. Yeah, let's get to business. So first of all, I would like to get Denis' perspective, since your background includes previous business ventures, and in your opinion, how the serial entrepreneurship influenced your approach to building and scaling in Europe? Denis Galenko.
Yeah, sure. Hi. Yeah, sure. Hi, everyone. So, yeah, I'm Dennis. I'm the co-founder of Allpass AI, which is the easiest, fully automated KYC and ML tool. So, sorry, I wasn't prepared for that. Could you please repeat once again the question?
Yes, sure. For you, everything I can do. Okay, guys, so one step back, since I see everyone needs to get to the point. Yeah, so at the end of this panel discussion, I expect us to form a guideline for businesses on how to scale in Europe. and I really need you to share your experience. But to begin with, I want our audience to get to know you a bit. So I would kindly ask you to present briefly, very briefly, your product, and then you, Denise, particularly share your perspective, how your background, serial background in ventures influenced your scaling up, and where are you now?
Thank you, Elizabeth. And now it is crystal clear. So, well, Allpass AI is actually the result of our previous ventures, and it is the outcome of a couple of pilots we had to do. So it is a long story with lots of mistakes, but eventually it wouldn't be possible to get where we are without that prior experience. And I would say that it definitely helped us to, I mean, the prior ventures we had definitely helped us to understand what not to do, I would say. Yeah. For instance,
sometimes it's even more important.
Exactly. So, not too many people pay enough attention to that, but we clearly understood while having a couple of pivots that doing customer development interview really fast would not help your business, or building business models, which is hard to scale on other markets apart from your home market, is also another mistake. Or, for instance, defining a corporation as your ideal customer profile when you're an early stage business is another mistake, because the sales cycle with those guys is just a year plus, so you will have no chance to survive. So it may sound obvious, but actually in the reality, it comes with different sources. Yeah, you may experience some huge demands from corporations. So you might think, okay, I think I now got the market. I should go after these guys. And now you see that it turns into meetings which last for months. Yeah. So answering your question, we have learned a lot what not to do, and let's say avoiding those traps around.
Great. Okay, yeah, thank you so much. After that, we will go to forming a guideline. So I kindly ask you to prepare your biggest fuck ups and as the most unexpected points. So what you faced during the scaling up. All right, let's pass to Ludmila. Ludmila Tpashenko, founder of AgriAnalytica. It's a great pleasure to have you here. And as I've previously known, you had an experience of great expansion in Latin America and Africa. Could you please highlight how these markets needs differ from European agriculture fintech requirements, since you have experience in both?
Okay, hello everyone. Thank you for having me here, and I am Ludmila Tymoshenko, and I would like to share a little bit our experience, how we scale up in other countries. So I would like to say that in Latin America and Africa, first of all, we are developing agri-financial ecosystem platform in order to help farmers to have access to finance, market, and knowledge. So in Latin America and Africa, we see that many farmers don't have a credit history, so we need to use additional alternative data, such like as satellite data and other alternative data. So because in Europe, farmers have credit records and government subsidies, and all of this are very important for financing. So, and in Ukraine, almost the same. And in our scaling in Latin America and Africa, we were needed to adjust our tools for all of this market. So one of our lessons learned that each region requires a different approach, very different approach to lending, risk assessment, and technology integration. And in that case, we were needed to adapt our scoring models for all of this market.
In terms of, thank you so much, Ludmila. In terms of numbers, like your representation in Latin America, Africa, in Europe, maybe in percentage or maybe in clients, so for us to know like the perspective.
Mm-hmm. Latin America, it's 4 percentage, and Africa, it's 14 percentage, 15 percentage, something like that.
In Europe?
Yeah, in Europe. In Europe, we present only in approximately 5-6 percentage. We only start to move in Europe.
All right. You mean from the market, 6%?
Yes, I mean from the market.
Oh, good luck with it. Okay, guys.
Yes, thank you so much.
Yes, great. Yeah, we'll get back to you soon, very soon. Yeah, it's just
okay. Thank you.
introduction. All right. Yeah. So, dear easy peasy startup. Yeah. So I've heard a lot about your strategy, marketing strategy, attending different conferences. Could you please briefly sum up your product and a brief summary on this case and this marketing strategy?
Hello, everyone. Thank you for having me here. I'm Alexey Alexashin, the CEO of EasyPeasy InsurTech. EasyPeasy is user-based insurance platform. Our existing product allows car drivers to optimize their car insurance on pay-per-mile basis and driving style report. We use insurance telematics, data analysis, and give car drivers personalized quote based on these characteristics. Now we operated in Ukraine, but we on the way to scale in Europe. We established a company in Estonia now, and if we're talking about our journey to scaling beyond Ukraine, we visit different conferences. If my recommendation, if you're on the way to scaling in Europe, you must to visit the biggest fintech conferences. For me, it's Viva Tech in Paris and Web Summit at Lisbon. It takes Web Summit in fall and Viva Tech in the end of in the beginning of summer. And every half a year you can attend this conference. You can achieve new idea. You can meet partner with insurance company with investors and the main for us, it's to be in InsurTech's community because it helps us to achieve new idea, to help. And in this case, we have some experience of scaling with bad experience, and can share it with you if it.
Yes, sure. You please prepare it. Yeah, but briefly, in terms of visiting conferences, how do you measure return on investment? Is it only just about inspiration and being part of the community, or you have certain measurements and data that prove you need to go there? We get certain amount of clients or something like this. Because I always know there is a huge problem regarding argumentation. Yeah, like why do we need to go there and how to measure our success? Whether we need to invest in this direction.
Yes, at the first, we are InsurTech platform. We didn't have insurance licensing, and for us, the first step is attract a partner insurance company. And every conference for us, it's the first, it's the possibility to looking for partner insurance company, and only with the partner we can go to investor and receive money for scaling our products, because without partner insurance company we can't operate it on European market. And that is why for us the first step is looking for partner, and only after that we show possibility to investor how we can grow on this market, and how many we can all earn, what is our market share on this market. We can show it in our pitch deck, and we do it, but the first step for us, it's looking for partner.
Oh, yeah, sure. Okay, I see. So do you have certain KPIs, partners to attract during the conference?
Yes, we have a negotiation with a big insurance partner. With PZ2, it's big insurance company in Poland. We have a negotiation with them. As well, we have a negotiation with OTP Bank in Hungary. And unfortunately for us, the process of organize meeting and make a negotiation in Europe not so fast like in Ukraine as we used to have.
Yeah, something very
that is why the process is not so fast how we want.
But honestly, I wouldn't say that your field is about being fast and furious. Basically, it's about stability. So let's accept things as it is. And yes, thank you so much, Alexei, for your overview and your experience. That was just warm up. And last but not least, I want to ask Head of Business Development, Fisher Banyuk, Spendbase, also brief introduction on your business model and your product. And also, I'm truly interested, how do you balance between maintaining your current market position, and you have some, and exploring new opportunities and operating on European market?
Hi. Yeah. Sure, thank you. At Spendbase, we optimize SaaS spending for companies. Companies are buying a lot of subscriptions on Google Workspace, HubSpot, Zoom, for example, and spending like hundreds of thousands of dollars, even millions annually. We let them spend less by 30-40% overall. We spot unused licenses, streamline procurements, and let companies actually stop overpaying for the software itself. Regarding the question, basically, I think the main thing that we let specific people in the team to own the process, the specific campaigns, like specific part of the market. So they're responsible for it. They lead the process, and we don't have to micro-track like what they're doing there. And that's not only about the expansion, it's like about everything that's happening in the business. People just have to be, people have to own what they're doing on the market. People have to be aware of what these specific markets needs, like speaking their language, etc. That's from the like SDR marketing perspective. And we're not afraid of entering new markets. Like we test it. I mean, for the most of the time, we just launch general campaign. We track the inbound. We see which markets are more like interested in it. Like from which markets we're having more value from the leads. If to talk about KPIs, yeah, like which leads from which markets are more valuable for us, how much money we can earn potentially from them. And then we focus on those markets. So we tailor the campaigns specifically there, and then we can get the return out of them. So choose the right focus and put people responsible for it, so they own the process. That's the main thing, I guess.
Like very practical. Thank you so much. Now, guys, I want us to proceed to making guide. I want it to be consisted of 3 main questions. Maybe you will add something to me. And since I know Sophia will have to leave soon, I would like to start from you. So in your journey of scaling beyond Ukrainian market, what was your biggest misconception of the foreign market? I want you to present one or two, and other speakers, please consider this question to be asked for you to you too. Yeah, so I expect us to make a list of biggest misconception in scaling.
Well, if to talk about European markets, I think like the EU customers are much more pragmatic than we thought. If to compare them with the US customers as well, like they will very carefully examine all the pros and cons. They will compare you with the competitors. They will calculate the return on investment. It's all very important, since it's important to provide to them all of the context and all of the information to make the decision overall. Like from sales and marketing perspective, if you work with the US, you can go with more like emotionally strong messages. You can you can talk about target persons' personal needs and personal benefits. Yet in the EU, like EU requires more diving into numbers, and also in the social and environmental impact. So that's probably the main thing.
Oh, great. Ludmila, could you please share your perspective on misconceptions?
When we moved to other market, we realized that each country has different regulation and trust levels toward fintech, especially when we speak about banks and farmers, because many farmers prefer traditional banks and need time to accept new digital solutions. So as at the end, we this realization led us to some activity in which we were needed to localize our credit scoring tools and tailoring AI models to country-specific financial and agronomic data, special agronomic data and financial side. Other things which we understood that we need to form strategic partnership from our side. It's from our side. It's very important things, because we need to integrate in with the banks, and instead of launching independently and maybe with some of the fintechs company, in order to add some value to our solution. And we were needed to focus on compliance and to make aligning with EU regulations and financial standards. So all of these shifts helped us better fit into other market and scale more effectively than we can do it before. So all of this lesson learned helped us to be more effective, to move more effectively than it was before. So it's some takeaway from us here. Thank you.
Great. It's very valuable. Denise, as about your company, Opus AI, like when you were entering European market, what was the biggest misconception? What you expected to be and how it turned to be in real life?
Well, here I would agree with Ludmila, since European market is considered as one and as a whole, where we thought that there would be like not only one regulation, but there will be some regional regulation for the whole Europe, and which is like the main basis. But eventually it turned out that each country also has its own regulation. It is normally a set of rules which is issued by the regulator, which is national banks. And it meant for us that we had to follow all of them in order, I would say, to build a product, a fully compliant product, and to cover that, which at the end of the day resulted in quite some time and additional product development on our end.
Oh, I say, yeah. We tend to see it as one, but basically it's many markets and regulations, especially regulations. Why not? Also, Alexei? Could you please share your perspective of misconception?
Yes, I want to highlight two main factors. And for our business, the first is strict regulation too, because I'm not saying we don't know about the regulation. Yes, of course we know about it, but we thought it's more for big, large corporation or insurance company, but we are just a financial company or like a broker.
Startup, yeah.
But it turned out that for agents, for brokers, it's the same. And so we change our business strategy and we enter into European market like a SaaS solution for insurance company. It's the easiest way for us in this case. It was the first factor, and the second one is a long process of organizing meeting and conducting negotiation. I talked about it in the first, because I can give you one example. We have negotiation with one big car importer. We present our solution, everyone like it, and we ask, what is the date of next meeting? Okay, we come back with answer, and we receive answer. We check our schedule, and the next meeting with innovation office will be in the 3 months. And I was shocked. 3 months, but
actually,
as I understand, it's normally for big company, for big corporation, but for us, for people from Ukraine, for Ukrainian startup, it's unusual.
Yes, of course. Yeah, sorry for interrupting. I said I'm a bit jealous as Ukrainian, like the scale of planning, like 3 months, half a year, 1 year. Wow, what a pleasure, treasure, I would say even. All right, yeah. So let's pass to the next question. Sophia, it's also going to be you and like your last points, as far as I know. Yeah. So maybe you would say that was the most contributional, like the biggest contribution to your development and scaling up on European market? What step? I do believe, and I do see there is a range of factors influencing it, and a great job behind it. But still, what may be one step that changed?
Well, one step. There are a lot of steps. I mean,
maybe you were influential at the beginning.
At the beginning. Well, research in the market, like regarding the regulations, okay, everybody's talking about the regulations, that's true. That's something really considered, especially for fintech. I mean, to understand what is the roadmap, like what we're gonna do to make the plan. That's the main thing. Like you can't launch a fintech product without like without complying to certain regulations, right? The crucial thing was to consult with people who already did it or who work in compliance. The crucial thing was actually trying, like actually the first step, if you talk about acquiring new customers in the European Union, I believe in trying and in testing. Like, first of all, you research, like you chat with people, you understand what you're dealing about with, like what is the roadmap for the next like months, etc. But then you actually talk with clients, like you provide the products you already can provide to the clients, and so you get the feedback, you figure what are the parts of the market that are the most convenient for you, especially. You test, you get the feedback, you test again. So I think like that's the main thing. That's the main
research, roadmap, and testing. All right, great.
Thank you. Yeah. You can actually make you have to make the first step, and that's the crucial.
And don't be afraid. Yes, thank you so much. It inspired me a lot. Yes, thank you for your contribution.
Thank you.
See you soon. All right. Okay, guys. Yeah, we're narrowing our circle of speakers. Yeah, but let's continue. The most crucial steps you believe you made during your scaling up. Yeah, again, considering like we have audience of people who are just making their first steps in it. Dennis, would you please elaborate?
Yeah, I was just thinking because I didn't want to repeat what was already mentioned. But again, yeah, I also share the idea that making the step instead of thinking to make the step is the core thing. Yeah. The most important step we made was actually taking the decision to scale, yeah, because your home market or the current market where you're operating is becoming so much comfortable, where you already know everything, you know how the things work, how the conversions, the lead generation, the network, and so on and so forth. And then maybe it is kind of moving from your comfort zone, I would say, because nobody knows you on the new market, and you need to start from something and testing out the hypothesis on how to scale, whether it would be a partnership or just cold outreach or some marketing campaigns, or just starting testing all of that. I would say I would also agree in that it is the crucial the crucial one.
Great, thank you. But one more question to add, like, what is the sort of resilience of this courage to take a risk for you? How not to be afraid?
It is not if we're talking about startups, it is not, I would not call it a risk, because if you're operating on a single market, then you cannot be perceived or understood as a venture, yeah, because operating on one market is just not enough then you're a business, not a startup. From the basics, being a startup means that your product should be capable to scale globally, and the sooner you prove it to yourself, to the shareholders, the better for you. Then you can validate the model, you can validate the idea, the everything. And yeah, so it is the matter of time. And we were trapped in that at the very beginning, because it was a comfort zone. We had such a cool network, and it is so hard to obtain it in the fintech, because it is very kind of closed club, you know, that a narrow one as well. And yeah, so imagine like you're a startup and then you're entering Europe, where it is already like a mature one, and you're a little guy who wants to disrupt it or do something huge. Like, come on, it is not that easy. And it is very, yeah, it is not very obvious that people will start talking to you. So yeah.
No, okay, thank you so much for your perspective. Ludmila, I'm eager to hear yours. What was the most influential step, in your opinion? You're in your skin.
From our experience, yes, sure, expanding into the EU market, it's challenging for startups, but what was in our experience, it's first of all, we did it in complex way, because we did it in parallel, and it should to be understanding local rules, building partnership, maybe building partnership, it should to be first, and adapting our product and and all of this has helped us succeed when we moved to other market. And from our point of view, also very important, trust. The key from our point is trust. Farmers and lenders must see that fintech as a company, and your solutions are safe, easy, and beneficial, win-win for all of part. And in our case, it's maybe very important, because we propose our solution. It's not only one decision, but it's ecosystem, whole ecosystem, in which different solution add value to other solution, and the all participant of ecosystem. So we do it in a complex way and parallel way, something like that.
Yeah, I get you. Yeah, but great. Thank you so much. And thank you for pointing out very important point about trust. Basically, when we are talking about fintech, it's truly important, this feeling of trust. How do you get to build trust, especially when you are just scaling on such a for far markets like Latin America, Africa, you are going there yourself, or how to build trust in such different cultures with such a gap? Geographical, cultural.
No, first of all, we were building a partnership, and we have it was not as a new market and without any partnership, without any maybe partnership with the banks, with farmers, because we started to do it before, and we have a very good connection with some African agrarian agricultural banks, and we did it during last years when because we are participators in SME finance forum, and this provides us the possibility to participate in different workshops, webinars, and conference, and we know each other. For example, we have friends, we have colleagues from African banks, and it helps us. We discuss a lot when we have time in conference. It was before, and then we had along building partnerships. We present our products, we discuss their problem and how we can fit, and how we can help them to make some solution to solve their problem when they're working with the farmers. And then we also have some colleagues which are working very closely, and they are representative from Farmers Association and so on. So building partnerships from our point of view before we start to move other market, it's very important. And the key, as I said, is trust, because we know each other during before we move to this market. So it's a very big preparation work was for us, and then we do it together with colleagues from African markets, from together with the colleagues from African banks and farmer association. So we do it together because they know exactly that what we propose for them, that our solution add value for them and for their solution and for their activity. And for example, in our case, it's credit scoring and some solution for ecosystem solution to engage input suppliers and traders in this ecosystem, which and our solution start from farmers registration and with credit scoring and partnership program with input suppliers and traders and other participants of this ecosystem. So it's complex way, and it's very important from our point of view. It's building partnership, and trust is the key of all of this process.
Oh, great. Thank you so much. So as far as I know, as far as I get, is building trust, connect with your partners and rely on them, and make them advocates and ambassadors.
Investigation our solution and their need and matching this, and in that case it will be it might be very successful.
Thank you, Ludmila. Also, I forgot about decades of homework, sorry. And also do your homework before. Luckily, yeah. All right, thank you so much. Alexei, as for you, what was the most influential step for your company, aside from the mentioned, maybe, if it's possible? Yes, you made, and the way you see.
Oh, the main step of our company. I think the main step for our team is we decide to become a startup after 20 years of experience in a stable business. We came together to break
What
the
pushed
old
you this
rules.
way? Why?
The old rules of insurance because, because we change
Secure.
we change our mind that's why, because if you have a 20 years experience and on the one hand it's a great, but on the other hand it's a scary because it's scary to change something, and if you know how its business work in one moment you decide to break it and to build something new. And I think it was hard. It was hard, but we make this big step, and now we no really market disruptor in Ukraine. Our solution, I mean, and I think in the future, in the nearest future, we can do it in East Europe.
What filled you confidence? Like what you relied on when doing this step? Because I made a joke about your market being too secure, but still, what pushed you this way?
The first signal was coronavirus. When coronavirus covered the whole world and come to Ukraine, a lot of car drivers start to call to insurance company and ask to force their insurance on or not pay installments, not pay installments for car insurance. And we understand it's a time for usage-based insurance because people don't want to pay the money if they don't use something. That is why we understand it's a time for this solution, and we decide we must to do it because the experience of United States, the experience of West Europe, UK especially show us it's this approach is the future of insurance, and we decide to make this step first, to be first.
All right. Okay.
In this initiative.
Yes, thank you, sir. Very interesting perspective. Before we are moving to our closing remarks from each speaker, I encourage our dear audience to participate and also leave your question in comment in chat. So we will have a few minutes before leaving yet for your questions. So if anyone eager to get a perspective and ask something, please, it's the right time. And our dear speakers, it's a great pleasure for me to be moderator of your experience sharing. As for now, let's go, no, not only now, but for the future. What you see will be the main effect on your business? What maybe risk, maybe change on the market you expect and you are currently focused on? So our audience always also will be aware of the perspectives and focuses of scale ups.
Maybe I thought.
Great.
It's I believe our solution can help to change the existing market in Ukraine and in whole the world, and our solution we influence on car drivers' habits, because in our solution we can drive style report and we give some bonuses for our customers when they drive safely. And now we built on AI part of solution which give advice for driver how to improve their driving style for driving safely and receive more bonuses, and not pay for insurance, receive bonuses for good driving.
Okay, so I see your main focus is AI integration in terms of advising your clients, your customers.
Yes.
Okay, cool. Thank you so much. Ludmila, Dennis, who would like to proceed first? Yeah, again, I would refresh the question. Is about like the biggest influence you expect to be in the nearest future. What takes your focus?
Okay.
Ludmila, will you go first? Yeah, the
Yeah,
word to you.
Dennis, yeah, first, yeah, okay.
Ladies first, Ludmila, go ahead.
Okay. So I believe our solution as an ecosystem agri-finance platform powered AI can help farmers feed the world and can help farmers from all the countries feed the world because it's a very comprehensive solution, and we focus right now on Europe and Latin America and Africa market, and I believe that our solution powered AI, because it's our main focus right now, can help farmers not only feed the world but also make a proper solution with climate change and other things which now impact for our planet. So I think our solution help to deal with this.
Oh, cool. Both you feel so up to date in the context of Dennis.
That maybe I misunderstood the question, but you asked what the outside effects are causing some changes in these startups, or come again, please.
Yes, sure. Everything fair. So basically, what upcoming changes gather your focus and how you adapt your product to it?
Okay. What the upcoming changes? So I don't, I don't like to repeat again and again, but still, yeah, the regulation. Yeah, the guys from the law firm, Nicholas and Aline, so they were talking about the regulation which is changing, and we also see it. Like, for instance, European market, I would say, is one which is regulated the most. And the new regulation is coming. We're talking about digital assets. There's this MICA, DORA, and there's so much more coming. And for us, since we are providing a solution to solve it, on the one hand, it gives us more potential to operating on the market, since we are providing the solution for that to make all the things easier with KYC and AML and MICA and DORA and whatever. But on the other hand, what we see is that it could become too difficult to follow for smaller businesses. And for the time being, there are only like things, but what we already see is that some of the smaller businesses are eager to move their licenses or operations outside of European Union to markets like Latin America or Africa. And yeah, so this would mean that we'll also, in terms of product, we are ready, but in terms of, in terms of markets where we are operating, would mean for us that we would also need to adopt.
Wow, great. Thank you so much. And yeah, since there are no questions from the audience, but I believe they had a day. All right. Yeah, maybe we can make some closing call to action to people who are just scaling up their business. Last address, last sentences. Inspire them to act, guys.
Give us some motivation, because today you've been through so many challenges and something that is like hard to overcome, but now we need some light at the end.
I'm not sure whether these people are those who are gonna tell us about it, since the regulations and they're operating in fintech. But
no,
still,
I believe they can. I know them. I talked to them, so
I trust you on this. All right, guys, please inspire us to act and to believe in. Yeah, great. Any volunteer?
I raised the hand in digitally and physically, so if I can answer that. So basically, I would say that as you learn from all of the startups, there are lots of challenges. There's lots of job to be done. There are a lot of mistakes which probably all of the founders and involved will have to deal with. But for us, what was very useful and helpful for us is to have that why behind, because like before doing what we are currently, before solving the problem which we're solving right now, we were working on a fintech which required this KYC and AML, and we definitely didn't want to focus on it since we had a completely different problem to solve. And yeah, sorry to say, but it was just a pain in the ass for us. And eventually we solved it for ourselves, and this became a very powerful why for us, because later we understood that there are plenty of businesses who require such a solution to not to focus their attention too much on KYC and AML, but to focus on what they're working on. And that gave us so many insights and hints. I mean, who are those companies? Who are the personas? So having that why behind your startup and why you are doing it is always something you can rely on. So not just start doing it, not just for earning, I don't know, for earning some money or becoming whatever, a successful founder, because you will always need something you can rely on when you are down or maybe when you are up.
Thank you so much. Very inspiring.
Dear participants, would you like to say add up something, Alexei, Ludmila?
Yes, of course. The last sentence, it's the great. I think all startups are born with mission to change the existing business, to change the world. And I wish you don't give up to go to achieve your goals, and don't if anybody say you lose, don't hear it. Don't give up and go to achieve your goal.
Yeah, have such kind of a filter. I do. Like, just cannot hear your information of me failing. No, never. Thank you so much, Alexei. Appreciate it. And Ludmila?
And I would like to add maybe colleagues need also to need that when you solving one pain point, maybe it's not enough, and creating interconnected ecosystem, it's a real scalable value, and this is our way. And maybe somebody from our colleagues also can see a value in this approach, because from our point of view, one pain point, it's not enough. It should to be more complex, and it's interconnected ecosystem. It's a real scalable value for all participants of ecosystem.
All right, yeah. Enough is enough, but it's never enough. I see.
Yeah, right. Something like that. Yeah, exactly.
Thank you so much, guys.
Scalable value, it's very important from our point of view.
Yeah, sure it is. Yes, thank you so much. Thank you for your contribution. It was a great pleasure to spend this hour with you guys. I wish you the best. Scaling up, promote our country, promote our products, do your best. And thank you so much for everything you do. And thank you for having us there.
Thank you for having us.
Thank you.
Dear colleagues, I just want to take a minute to say that I adored your panel discussion. It was so warm and so, like down to earth, but also inspiring. And I think this is exactly what we needed in our FinTech Soft-Landing Workshop, because we need to know the reality, but also believe in something that is powerful. And your last touches and your motivation really inspired me, and I'm not even a fintech founder. So thank you for your
time. About regulations.
Thank you for your time, dedication, and hope to see you in other ecosystem networking events and etc. Good luck. Thank you. Dear participants, bye-bye. Dear participant, this is the end of our Fintech Soft-Landing Workshop. I really hope that you loved it. We really hope that it was useful to you and that you found your insights together with our experts, together with our speakers. We personally really enjoyed it, and it's a huge pleasure to have such specialists and experts on board with us, helping us, scale, grow, and expand to all the foreign markets. And last but not least, what I want to say is that Seeds of Bravery is a unique program that we have right now in Ukraine, and with all the open to public events, you can really boost yourself, boost your product, and that this knowledge that is provided inside this ecosystem can help you really strengthen yourself. And this is something that we really need right now. So thank you once again for being here today with us, and we wish you all a safe night and good luck with scaling. We will send the presentation, and the recording will be available soon on YouTube. My name is Anastasia Lubisheva. I'm from Vacuum Deep Tech Acceleration, and this FinTech workshop is organized by Vacuum Deep Tech Acceleration and Lux Innovation, together with our partners. It's AccessBig, it's Erasmus Center of Entrepreneurship, and DLA Piper. Thank you, colleagues, and thank you. Have a good night. Bye.